Welcome to Motley Fool Weekly Tech Review. I'm Chris Hill, joined by Eric Bleeker and Lyons George. Let's talk smartphones. Rumors about an Android phone for $100. Is Google going down this road?
Well, yeah, and we're seeing a lot of Android phones moving into that sub 100 level. The problem is right now, Android, especially on the RAM side, it's got higher specifications that if you want to push down into that $30 or $50 layer, where a lot of people, in Africa and emerging countries would be able to buy a smartphone, well, the operating system's a little too bloated. And we've seen this from a lot of companies that make operating systems over time. You add more features. Remember Windows Vista, how it was basically choking computers out and Microsoft had to go back, thin it out, make it a little better in Windows 7. What Google is basically doing is saying, hey, we're looking at where the growth is at. I've got right here, and this is from Qualcomm, which is a good authority to have on this. Between 2011 and 2016, China, 3G and 4G connections growing 246%, India 185%, Middle East and Africa 232%, and Latin America 308%. These are absolutely eye-popping growth rates, but if you want to get down to those levels, you need to slim down your operating system so phones can be able to run at these points. And this is still a rumor, but it makes all the sense in the world if technically they can do it.
It seems like when you look at the amount of cash that Google has at its disposal, it seems like this wouldn't be that big a bet for them.
I totally agree with you. And in fact, even if it wasn't a very profitable move for them, in terms of gaining market share, it'd probably be a smart one. I mean, Google's shown time and again that they're willing to sort of sacrifice profits to grow their brand on a global scale. And by putting out a smartphone that's accessible, to Eric's point, to consumers in those sort of emerging markets where 4G and 3G is just exploding, I think the returns on that, especially over the long term, would be very attractive. Now, one question I wonder about is, okay, Google's thinking about hitting this sort of lower end emerging market. Is there any way, Apple is rumored to be putting out their low end phone, but even that's probably going to be, well over $100 price point. Is it smart for Apple just to be ignoring that end of the market?
I mean, that's a good question, and you're obviously, the big question is here, what level of cannibalization are you going to have? You look at in a country like China, Apple has about 25% market share in urban areas. Mm-hmm. A lot of that is based on, call it what you want, but kind of a premium cachet.
Right.
It says something to be holding an Apple phone. If you come down market, can you actually hurt your status in the up market? And more so if you release it in we're already seeing people coming downstream to buy iPhone 4 and 4Ss in America and other countries. If you release a really low-cost iPhone, even if it's in like a $300, $400 range, you have a big risk of cannibalizing more than you're helping. I think it is a good move for Apple when you total it out, mm-hmm. But to not look at the risk would be, ignoring something pretty significant there.
Let's move over to telecoms, and I'm thinking specifically of Sprint and the ongoing, almost a soap opera at this point.
The Clearwire saga.
Yeah, exactly. Where are we now with all of that between Sprint, Clearwire, Dish, Softbank, everyone?
Okay, so I think the saga is sort of drawing to a close here. Essentially, Sprint has put in a final offer that values Clearwire at about $5 a share. Dish, which has been a feisty competitor, is saying that they're not going to come back with a counteroffer. So it looks like Clearwire, for everyone who doesn't know, that they're a company that owns a fair amount of LTE-enabled broadband spectrum. So by acquiring them, Sprint would be able to expand its LTE offerings on a nationwide network. If you ever watch Verizon commercials, they have the map that shows where they have LTE. Well, that's a real thing, and it affects a telecom company's cachet with consumers. So it looks like Sprint's probably going to close that deal, which is interesting because Google owned a serious stake in Clearwire up to about a year and a half ago and dumped it. So I bet they're wishing they'd held on to that. I bet someone in their finance department, if Google has a finance department, which we'll talk about later, is feeling bad about that. But then sort of the top layer of this whole thing is that Softbank, which is a Japanese telecom company, and is about to close its acquisition of Sprint. So you have Softbank about to close an acquisition of Sprint that's about to close an acquisition of Clearwire. And the CEO of Softbank actually took the stage at a shareholder meeting in Japan, I guess, earlier today. I'm trying to think of the time difference. At some point in the last 17 hours. And he said that He said that essentially his company, by any metric, was going to be the biggest company in the world following these acquisitions. He said by revenue, by sales, the same thing, by revenue, by profit, by market cap. So it really looks like
So downplaying expectations.
tempering
Really?
expectations.
Say, maybe
He's
Japan might be a good first step.
He's never heard of sandbagging. Anyway, it's just an interesting bit of consolidation happening in a space that's traditionally, telecom companies aren't generally big movers and shakers.
Another rumor making the rounds is about Google and just sort of their M&A activity. We were talking before we were taping here, again, Google with so much cash on the balance sheet, do they need to be really dabbling in the private equity firms as is being rumored?
Right. So what the rumor is that, and it's actually not a rumor. It's coming straight from the horse's mouth, or in this case, the head of mergers and acquisition. I believe his name is Don Harrison over at Google. But he said that going forward, Google will possibly partner with private equity firms to help with both financing and consulting and carving up prospective acquisitions. Now, to your point, I don't think Google needs much help with financing, right? They have that $50 billion in the bank. So what it comes down to is Google essentially saying, hey, we acquire a lot of companies and we don't always know. We know that we need them. They talk about the toothbrush test. They only acquire companies that they think people need to use that product once or twice a day. We know we want to acquire the company, but we're not quite sure how to fully integrate it or what parts to cut away to make it lean so it fits our model best. So I guess we're going to bring someone else in to help us figure that out. To me, that sounds very ungoogly. I see Google as as sort of a sovereign entity. And I would expect them to do what Yahoo had done, which is sort of lure someone from the private equity world in-house and have them do it for them instead of reaching out to a third party. It's something strange coming out of Mountain View, that's for sure.
Does this surprise you?
Yeah, I mean, it's kind of a squishy topic. It's hard to get a good handle on exactly what's going on, but you always worry about, everyone would say, when's Google going to essentially become Microsoft, aka once you reach a certain size, bureaucracy takes over and you become a little less innovative and nimble. Bringing in an outside PE to handle acquisitions, especially when they have a relatively good track record of integrating a ton of companies, strikes me as a little weird and, as Lyons said, just ungoogly.
It also makes you wonder if they're having trouble integrating Waze. They knew they were good at maps, and they knew they needed social, so they bought a social map company. But for them to do that one week and then the next week sort of come out and say, hey, we need help integrating our acquisitions, maybe they're showing their hand a little bit.
Well, as we talked about earlier, you made the point that Apple, for all of its strengths, Apple is almost never the first mover on something. They wait to see if something is tested out and then they go in. It seems like Google, when you look at their acquisitions, or at least some of the bigger ones, they're sort of the same way. They hang back and then at the last minute, because it was Facebook that was about to close the deal with Waze, and then Google swooped in at the last minute. It was Yahoo who was going to acquire YouTube, and then Google comes in at the last minute. So definitely a story to keep our eyes on here.
Absolutely.
You mentioned Microsoft. Let's stick with Mr. Softy and the reports in the Wall Street Journal this week that Microsoft got very close to acquiring Nokia. Maybe not all that big a surprise, given that Elop moves from Microsoft over to Nokia.
Yeah.
But I don't know. Given as someone who owned shares of Microsoft for a long time, I'm in some ways more surprised that they didn't pull the trigger on Nokia.
Yeah, the second that you've got Elop over there going to Windows Phone, and then you've got Microsoft getting more into hardware, obviously with tablets, but constant reports of them look at their own smartphones. Of course, this report was going to come up sooner or later. I think what's kind of interesting in it, too, was it wasn't just Microsoft this week looking to acquire potentially Nokia. It was also Huawei, which is a big Chinese company. And where this report comes from was they were launching a phone in London, and a representative from the company said they would be interested in Nokia, and it pops 11% immediately. I think this is a case of people also needing to look into reports. He was probably just speaking candidly. It doesn't mean advanced discussions as the Microsoft report was. But I think when looking at Nokia, and people are aware of these risks, but a lot of the interest is because of where growth is headed in smartphones, and we had talked about this earlier with Android moving downstream, Nokia is pretty strong down that market still, and its Asha line is selling well. The caveat I would say to investors is, over the last 3 or 4 years, a constant has been underestimating disruption at the low end of the market, and it's happened faster than anyone expected. I remember a company named Motricity that was supposed to do kind of software on feature phones had a chart that looked very .com-y because feature phones fell off far faster, and I think as Android attacks that $50 and less price point, it's going to put a lot of pressure on Nokia's dominance down there. So I don't know if we'll see this report resurrect again. It just feels too natural not to be a continuing storyline. But Nokia is a tough company to integrate.
Well, it is a tough company to integrate, and yet you look at Nokia, not just smartphones, but sort of global cell phone market share. They got 19% of it. So I have to assume on some level there are people in rooms at Microsoft and these other companies that are looking at Nokia and saying, there's got to be something there. There's got to be something there that we can use, and what is that thing, and what are we willing to pay for it?
Yeah, I mean, I would imagine for every executive at Microsoft saying that, there's one saying, how can we take that 19% market share and shrink it, square it up? I mean, one thing when I think about Microsoft buying a serious, a phone manufacturer, is just the weakness of Microsoft's operating systems. I mean, that's a problem. That's why their current operating system in the smartphone market has such a low share. I want to say it's down below. I'm going to say
low single digit.
Just low single digit. And you look at PC sellers, retail personal computer sales, and there's companies that are saying, hey, we can't move these units because it's all based in Windows 8, and Windows 8 is terrible software. So I would hope that if they were to make that acquisition, they would maybe let Nokia sort of stick to what it's good at and not try and bake all of their Microsoft products and goodness, or features and goodness, into the existing product line.
3 years from now, is Nokia still a standalone company, or does someone buy them?
That's tough.
Make the call.
I would say yes, standalone still.
All right, we'll wrap it up there.